Good evening, fellow traders and content consumers. My name is Katlan. Today I'm just going to be representing Ameth Trading. I'm going to be taking you through an analysis of GBPJPY. And obviously, we're just going to be starting on a higher time frame just to get a bird's eye view of what the market might potentially do. Because the reason why I like starting on the higher time frames is because there's less noise, right? There's less noise, price is more stable, it's less erratic. So I just get a bigger picture of where price may potentially move, right? I just get a longer term view of the potential price movement, right? So before we do that, I'd just like to draw out key levels that I should be looking out for where price was really sensitive. Right? I'd like to draw in a key level here. And where else? Let me just draw in a key level right there, right? Those are just the two levels that I've seen price constantly retest, and there's been a strong movement away from those price levels, right? So let's just go back to our full screen view. Right. The use of historical data in trading is very important because it allows us and it helps us predict future price movements, right? So from the inception of this currency pair, we can clearly see that we've had an impulse, correction, impulse. We had a push up, correction, and an impulse. And we can clearly see that here there's a form of an inverse head and shoulder formation of a pattern, right? Yeah, so we've continued to then have an impulse, correction, impulse, impulse, correction, impulse, and so on, right? What I'm essentially trying to establish here is that the market moves in cycles, right? We may have an impulse, we may have a corrective structure in the form of this kind of a pattern where price may continue to push that way, right? We had an impulse, we had a corrective move, and we've had an impulse, right? And another form of this is actually in the form of a continuation, where we can have this move, the impulse corrective move, in the form of a continuation pattern to then take price to the downside, right? So yeah, the market moves in waves, right? We've established that. So we've highlighted that it's important to use previous price data to help us and aid us in potentially analyzing the markets and seeing where price may move within the near future, right? Now, all of this is essentially irrelevant because it's all data, What we really like to use is the most recent piece of price data, which is this right here, right? We can clearly see that here we've had an impulse, right? And we've had a slight correction to the upside, and price came back to this price level again, impulse and price level came back to this price level again, right? And we're having now this impulse. What I'm essentially looking to see is whether price is going to return to this level right here, right? Because we have this double bottom right here, right? So I'd essentially like to see price returning back to that level where the impulse to the downside was first incepted, right? Now, before we continue moving any further here, I'd like to just highlight this. Right, we've had that. Right. Something I'd like for you guys to see is this right here. This could be seen as a liquidity grab right here, because as a beginner trader coming into the market, what you essentially come across, the industry is oversaturated. There's a lot of information. Some of it is very useless, right? Oversaturated with information, and this has an impact on the mass psychology of people, right? There's probably a number of people who executed positions at this level right here, right? They may have seen a slight break below this low here, thinking that prices are just going to continue dropping in value, right? What basically happened here is that retail traders coming into the market at this position here, providing bigger institutions with the necessary liquidity to then take price to the upside. think about it this way, right? I probably mentioned this in my previous videos, but as an institution, let's say I have 4,000 orders, right? I have 4,000 orders that I need to place, right? These people have a lot of money, right? So they're not trading like small money. So in order for them to be able to place their trades, they need to build scenarios to induce retail traders into taking positions, right? And a good way of doing that is through candlesticks, right? If you look at this candlestick right here, at some stage, this candlestick here looked like this candlestick here, right? It was just seducing retail traders into placing positions in the wrong direction so that the banks were able to grab that liquidity in order for the order to be met so that they can push price to the upside, right? And we've had this high swing high being broken, so we can now conclude that now we are within an uptrend because the market is in a downtrend up until a recent high has been broken, and this high has been broken, so we now conclude that we are in within an uptrend, right? So guys, I need you to be careful because there's a lot of people there who are trading novice retail concepts. Sometimes we need to understand that the industry is not made for retail traders to succeed, right? So basically, sometimes us as retail traders are there just to provide liquidity to bigger institutions so that they're able to place their orders to reverse the market or even take profit off their positions, right? Let's just move on to the weekly time frame. Let me just adjust this right here, right? If you if we're just gonna look at this piece of price action right here, we can clearly see that we've had an impulse corrective move in the form of a continuation pattern to then carry on pushing price to the upside, right? Another thing I'd like to make note of is, remember we were talking about candlesticks being selective and stuff like that. There's probably a lot of retail traders taking positions at this level right here because we're seeing huge engulfing candlesticks to the upside, and now we are panicking and stuff like that because we are not involved within the trade, right? So there's a lot of retail traders getting involved at probably around these areas right here, right? They're taking trades in the direction of the long-term trend of the market. So at some stage, these people are going to have to be taken out right before we continue with the move to the upside. So what essentially I'd like to see happening is for us to come back to this level right here, retesting the level of the market where price broke out of before we continue moving to the upside, right? And the only time that I'll be actually looking to take shorting opportunities is if either this low is broken or I see any other lows being broken on the lower time frames. Let's just move on to our daily time frame. Yeah, what we can actually see happening here is that we have impulse, correction, impulse, right? We may get impulse, correction, and then another impulse, right? And that would be a nice head and shoulder formation forming right here, right? And if that actually happens, I'd like to how I'd look to take advantage of this is if we see price trickle down a bit, see a retest of that level for price to then continue moving to the downside. Right, let's just clear all these drawings. But right, what I'm seeing here is that this low has been respected by this low, right? We don't break below this low, so we are still in an uptrend up until a recent formed swing low has been broken. This low has been broken, so we are still in an uptrend. But essentially, this is moving to the time frame, right? What I'm seeing here is that we've had this impulse creation impulse, right? We've had this impulse and price has just been correcting. We've just been kind of retracing. This is a retrace movement, right? As to how far this move will retrace, we don't know. We might retrace all the way up here, breaking this high, and then continuing with the uptrend. Mentioned previously, it's so important for us to draw probable and possible scenarios. So by doing that, we're just looking at things from just more than just one perspective, so that we're building more than just one scenario, so that whatever the market chooses to do, we have more than one idea of taking advantage within the market, right? By drawing more than just one scenario, you actually drawing out multiple opportunities to then be able to recognize those opportunities and then take advantage and potentially profit from the market, right? Another thing that I can see here is that we have this kind of inverse head and shoulder formation pattern, right? To then probably continue the move to the upside. Let me just move on to the lower time frames again. Another thing that I'm seeing, all right, is that we've broken about this high right here, right? We've broken about this high. What essentially I like to see is imbalance getting filled and then continue our move to the upside, right? This actually confluences with our head and shoulders, inverted head and shoulders formation. Other thing to take note of, let me just move on to the 1 hour time frame. You can clearly see that we've had this impulse, this corrective move, right? This looks like a continuation pattern to then continue moving to the downside before we have the long-term push to the upside. Right. We can also view this like this, right? And just remove this. We can also have this, right? This form of a pattern, right? We could have this descending channel to then push price to the upside, as mentioned before. Just do this, right? Another thing that I can see, to the 12 time frame just to look a bit better, is this, right? Clone that, right? The structure is not yet complete, but essentially we might even see price consolidate in this form of a channel to then continue the move to the downside, right? So essentially we've drawn out that there's a potential for price to move up and there's a potential for price to move downwards, right? So according to what I view as a high probability trade, I'll just be looking to get involved right here and placing my stops just below this low right here to then take price to the upside. But obviously I'm just gonna have to be patient and take time into consideration, right? Time is also another important factor when executing trades. Also the session you're trading within is also important. So there's various factors that I'll be looking at in order to draw or just build up as confluence as to whether I should get involved in this position or not. Yeah, and that's just I don't go too in depth on this analysis, but I feel like I have given a bit of information as to how I actually look at the market and how I actually look for opportunities within the market. If you enjoyed the content, just make sure that you comment down below in this post. Knowledge is power. If you made it this far in the video, I appreciate it, and thank you.